So Oneok is big in natural gas transportation, while Magellan usually moves oil and refined products. There isn't, or doesn't appear to be, a lot of overlap or natural synergies. Walk us through the strategic rationale of this deal.
Sure. So from our perspective, we've thought about trying to diversify our business from refined products and crude oil into natural gas liquids and natural gas, which is what Oneok does for some time. So for us, a big part of the strategic rationale is that diversification. At the end of the day, we think that diversification will create a more resilient company and actually provide more growth to our unit holders than what we can do on a standalone basis. So that's the rationale from our perspective. And then, secondly, we're getting a full value. When you look at what Oneok has offered and the combination we're putting together, they're giving us a full value that we don't think we can otherwise achieve. So when you look at just the quality of the company, the diversification, the synergies we expect to get from it, along with the upfront value, we think it's a very compelling deal.
Yeah, one of your investors, Energy Income Partners, has opposed the deal, saying that the tax hit it would take on the deal is higher than the premium it's getting. How do you respond to that?
Well, for us, it's not just comparing the taxes that may be owed by our unit holders to just the premium. You have to look at what were we worth before. So in May, before the deal was announced, we were trading for a little over $55. The deal value is $67.50. In either case, you're going to pay the taxes. That's something that we're really trying to make sure our unit holders understand. They owe the taxes in any scenario. The question for them ultimately is not the premium they're getting, but the total value they're getting, $67.50 versus $55.
Right.
And they're going to pay the taxes anyway. So they're better off with the deal that we've recommended.
Well, but their argument, though, is that there really is no premium when you factor in the taxes. At $67.50, it's basically a wash.
Right.
What's the longer term upside?
Right. So what you're doing is they're assuming that the taxes are being created by this transaction.
By the deal.
They're not being created by this transaction. They already owe them.
Yeah.
One of the features of a master limited partnership is to the deferral of taxes through time.
Right.
Not tax avoidance, it's not tax free.
Yeah.
So they owe the taxes anyway. So whether we're worth 55, where we were trading before, or whether they get 67.50, which is what we're recommending, they pay the taxes anyway.
But you understand that there's going to be a lot of pushback, and by pushback I mean actual legal pushback as well here. So as you embarked on this deal here, you took into account the possibility that you're going to have to deal with shareholder lawsuits?
Well, unfortunately, in today's world, shareholder lawsuits are just the nature of M&A. It has nothing to do with this particular deal in our case. We certainly understood that taxes are going to be important to our unit holders. And we have spent a lot of time with our board of directors and our advisors making sure we understood and understand the tax impacts for our unit holders. And when we do that evaluation, they're better off.
Well, let me rephrase the question a little bit. At $67.50, if for some reason there was a bigger deal premium here, would this tax issue still be there, or at least the tax issue that these investors are raising?
Regardless of what the premium is, the tax issue is going to be the same.
Was there any way to compensate them above and beyond that?
Well, we've already went and negotiated essentially the best deal that we thought we could get.
Right.
Okay,
so
fair.
at the end of the day, it's not just the premium. When you look at the total value of what our unit holders are getting, they're better off.
Are there any discussions to perhaps renegotiate the terms of the deal in order to win over shareholder approval, like EIP?
We're focused on this deal. This is a really full value for our company. I need to make sure that that's clear. This is a full value for our company that we don't otherwise think that we can generate. So we're focused on this deal.
This is one of the biggest midstream deals in years. What does it say about consolidation in this space? Do you expect there to be more in the industry?
It's a good question. I'm not sure that I would read through and say this deal means there's going to be more consolidation. The deals, when you put these together, are unique. They create value that are uniquely, the combinations are unique themselves. So I wouldn't say that there's going to be more consolidation because of this deal. There may be, but I think consolidation is uniquely driven.
But a lot of the consolidation that has been happening in this space is, a lot of people say, related to the industry's transition to renewable energy. Can you talk us through a little bit of that, about how consolidation prepares your industry better for that?
Well, for us, consolidation, in our case, it creates more scale, it creates more diversity. We have NGLs, natural gas, refined products, and crude oil. All those present opportunities. So if you think of an energy transition where, let's face it, we all see the transition occurring, but none of us can guess where it's going to end up. having more opportunities in different areas of the energy space is good. So scale and diversity are very powerful in an energy transition world. This deal does that.
This deal does that. That sounds great for investors. What do you think folks in Washington, the regulators in Washington, how are they going to feel about this?
Well, I think from our perspective, our businesses don't overlap in the way that I think regulators would be concerned. So we think it's very clean and it shouldn't cause us any problems.
It shouldn't cause you any problems. Once this deal, let's assume this deal gets completed, the integration has to begin here. You say there's no overlap. Does that mean that you're basically just taking on everything that Oneok has, or will there be some sort of trimming around the edges?
Well, there'll be some trimming. You don't put two companies together and not get some operational synergies and trimming in your words. There's going to be some of that, but that's going to be really, I think, the smallest piece of this. For us, the synergy is going to come from, well, we're in different markets, so the regulators are less concerned about the anti-competitive nature of it. We do have similar business in that we move liquid energy. And we think there's going to be a lot of opportunities to do that better.
Very quickly, what is your confidence that investors will approve the deal as it stands right now?
I think as we get our message out there and we make sure we understand the value, make sure they understand the quality of the combined company, and they understand they're going to pay the taxes anyway, and the tax bills are going to get bigger from here. If they understand that, we'll win.